Welcome to this brief news recap. March turned out to be a more difficult month for job creation than was previously expected. Payroll processing firm ADP reported Wednesday that private sector hiring decelerated and only 145,000 jobs were added in the United States. This comes after an upwardly revised 261,000 jobs were added in February and falls short of the Dow Jones estimate of 210,000 jobs being added. The data released Wednesday showed a gain of 75,000 jobs in the services sector and 70,000 jobs in the goods-producing sector. On the plus side, sectors like leisure and hospitality added another 98,000 workers, trade, transportation and utilities grew by 56,000 and construction rose by 53,000. However, the news wasn't all good. Financial activities lost 51,000 jobs, professional and business services fell by 46,000 and manufacturing saw a decline of 30,000. Despite this, even smaller companies with fewer than 50 employees saw growth, with 101,000 jobs being added in March. The ADP report serves as a precursor to the non-farm payrolls report from the Labor Department, which will be released Friday. The current expectations from economists surveyed by Dow Jones are 238,000 jobs being added in March and the unemployment rate holding steady at 3.6%. Overall, there is clearly a signal that the economy is slowing down, with job growth in the first quarter of this year being only 175,000 jobs on average. This is a considerable drop from the average of 397,000 in the first quarter of 2022. Additionally, annual pay raised only 6.9% in March, down from 7.2% in February, according to ADP's calculations. It's uncertain whether the economic slowdown will eventually lead to a recession, or whether this is just a momentary patch. We will need to keep an eye on the Labor Department's report on Friday to get an even better idea what March has meant for the job market and the overall economy. Until then, stay tuned for further updates.